Welcome back to Tokenized, Stablecoin Stats, the show focused on stablecoins and the institutional adoption of tokenized real-world assets. We're back again this month to dive into the stats behind the stablecoin market. My name is Anthony Yim, co-founder of Artemis, a crypto analytics startup, and joining me today is my colleague and friend, Andrew Van Aken, data scientist at Artemis. A quick disclaimer before we get into things. I'd like to remind you that the views or opinions of our contributors today are their own and do not necessarily reflect those of the companies they're representing. Nothing we say or should be taken as tax, financial, investment, or legal advice. Do your own research. Before we get into stats, I'm thrilled to remind you that this podcast is made possible by Visa and powered by Artemis. Well, before we get into things today, I actually want to do a quick shameless plug on our stablecoin report. So yesterday, Andrew, I didn't tell you this when we were syncing up, but we were catching up with a large fintech, and their head of crypto was like, "Hey, we use the stablecoin.fyi report internally very, very often. It's like the number one resource they go to when they try to get data for stablecoin payments." And yeah, and I thought that was very cool. I mean, it just was a passing comment. I forgot about it, but this morning I woke up, I was like, wow, that hard work that you guys did with Sebastian and our team, and it was inspired by Kai, actually. I think we were having a conversation with Kai like almost a year ago. The Kai obviously is the other host of the Tokenized podcast, and just how far we've come. It's really cool.
And we're looking to do another one, I think.
That is right. And so I wanted to bring it up because if you're listening and you are part of a fintech or a stablecoin PSP that does stablecoin payments and want to be included, let us know. You can reach us, or you can reach me at anthony@artemis.xyz, and we'd love to include you.
And another piece of banter, you were in Brazil this past 2 weeks while I once again sat home and made charts. I feel like every time we start this podcast, you go somewhere nice, and I sit home and make charts. But what happened when you got off the plane? What was the first thing that you saw when you got off the plane?
Yes. The first thing I saw was a Tether ad, actually, a USDT payments remittance ad. I have to dig up the photo. Maybe we can share it in a tweet or something. And of course, and then I was inundated with like PIX related, not actually ads, but like, I was paying for stuff, and PIX was always option, including at the McDonald's that I was at, where my girlfriend wanted to get a Happy Meal because I had a cool Hello Kitty toy, and one of the payments option was PIX. Yeah.
Very cool. Very cool.
We're living in the future in Brazil. Not like us American.
We just buy our McDonald's with regular old Visa cards, I guess.
All right. So a lot of things happening in Ethereum land, not just around stablecoins. I mean, of course, like the talk of the town these last couple of months are DATs, and Tom Lee's been doing his CNBC Bloomberg TV circuit, and ETH just hit all-time high, I believe, right? I mean, I feel like a year ago, everyone was like, yeah, ETH is dead. But it's crypto. Nothing is ever truly dead. And though, things that are the hottest projects are dead the next day, and the dead come back they come back alive. And so, I mean, this is incredible. This Ethereum for stablecoins grew 15 billion in supply this past month. Andrew, what do you think is driving this growth?
Yeah, one day a project could be dead. The next day it's minting $15 billion in supply month over month. So that'd be about a 15% gain, a little less month over month. And what we kind of talked about this last episode, where we're seeing this almost pick your swim lane type of stablecoin, where different stablecoin providers are trying to go after different markets and different strategies. And it's actually working across the board. Literally every strategy someone picks, you're seeing an increase in supply. And so the first audience that we're looking at here is more of on the retail side of retail customers holding stablecoins. And Binance just continues to be this vacuum of stablecoins. And so this is what we're looking at here is Binance share of stablecoin supply over time. And about last month was the first time they've almost eclipsed $50 billion of holding stablecoins, which is insane given that if you think that if the market is about $280 billion or so, they have 50 billion of that, and it just continues to just get sucked in. Even more interesting is that USDC, after Binance and Circle announced their partnership last year, USDC is just continues to just flow onto Binance. Now they're over $10 billion in supply of USDC on Binance. So obviously, a lot of this is crypto trading. People are, trading Bitcoin, Ethereum, etc. But Binance itself is almost starting to become a bank with huge distribution. So what we're looking at here is the number of days in before a company got to 1 billion in deposits. So for example, Chime, a company that just went public, started about 10 years ago, took about between 6 and 7 years for the company to get about $1 billion in deposits. But you're kind of seeing this just collapse. And so as companies become more digital native, and get more distribution, the time to attract deposits goes down and down. So, for example, even Nubank in Mexico, Nubank had already established their global presence and in Latam before launching in Mexico. It took them 183 days to get to $1 billion in deposits. Binance and Plasma being the new stablecoin L1 chain, they launched a partnership with Binance where users could get rewards if they deposited USDT into this Earn campaign that was sponsored by Binance and Plasma. And it only took them 15 days to get to $1 billion. That's almost only 10 more than Apple, the global iPhone maker. So that type of Apple, not an Apple fruit company. What do you make of this, Anthony? This is crazy to me that these global crypto brands are essentially have wider distribution and more brand recognition than almost traditional fintechs.
Yeah. Um, I mean, I think that's why Patrick Carlson says that crypto is a superconductor, room temperature superconductor of finance. It's just significantly lowering the barrier for anyone with a internet connection to be able to interact with finance, to be honest. And so, um, especially I think Binance's demographic, right? Like it's like my girlfriend just started a Wealthfront account. As Americans have, it's really easy for us to access these types of products without any kind of. She opened it purely for the high yield savings account, but I don't think Wealthfront is accessible for a vast majority of Binance's or any of Binance's customer base, right? And so, I mean, I think you have this like captive audience. Everyone has, they're like, right, I'm assuming there's like at least hundreds of millions of users on Binance across say like Middle East, LATAM, and many parts of Asia, and so it's like it's not at all surprising to me. I think that's incredible, and we're seeing it like unfold. And I mean, this is bring up more questions for me around like, hey, like how should banks actually react to this? Like, I'm curious how like new bank would react to this actually.
Yeah. Especially, I think we produced some slide a while back where like Binance would be like the fourth largest bank in Vietnam, and I think Vietnam is one of the largest traffic destinations for in Vietnam. So yeah, I mean, it's entirely possible that you could start seeing capital flight from real well-established banks to these crypto exchanges if they're offering high yield savings, especially in dollar-denominated products.
And I guess in emerging markets more, because we've been getting a lot of question at Artemis as a data company on the topic of, hey, we're like a bank, how much should we be afraid of stablecoins and crypto, and like, is there deposit flight? And I think in the US, it's not quite happening yet. But I think there's a bifurcation of like what's going on, maybe.
Yeah, exactly. And so finally, to look at this retail driving stablecoin adoption trend, one thing that we started to look at was PYUSD. And what we're looking at here is a chart of address to address transfer volume of PYUSD below $100,000. And we're getting this very evenly distributed transfer size where it's not one transfer size bucket that, dominates the total volume process. So for example, when looking at this volume, you can see transactions between $10 and $100 make up about, 25% of PYUSD address to volume. Then if you look at $100 to $1,000, there's another 25%. It's very distributed. And what I think that why this is important is because you can start to see this trend where actually people are using this for payments. And while the volume on PYUSD is about, $9 million a week, it's nothing crazy. In November 2024, it was $500,000. So you've essentially 20x'd in a little less than a year. And now with different apps, allowing stablecoin transfers, I only expect this trend to continue to accelerate. And you can also see with PYUSD where the PYUSD is located. It's primarily going into Paxos, signaling that it is being used for consumer-driven purposes. So you have this huge surge of stablecoin supply for retail purposes that are going into these retail-driven places like Paxos, PayPal, and Binance. That's essentially trend number one that we're seeing for stablecoin supply. On the totally opposite side, you also see this huge stablecoin demand from what we like to call almost crypto degenerates, if you will. And what we're looking at here is a chart of USDe by Athena. And supply of USDe actually doubled from July to August. So we were sitting at about $6 billion of USDe supply, and now we're over $12 billion 30 days later. And the key unlock for this is that Aave, the lending protocol, the DeFi lending protocol, allowed people to deposit Pendle tokens into their lending pool and to borrow USDe against that. And what Pendle does is it almost functions like a credit default swap where you can essentially like lock your interest rate in. And so like, let's say if Athena is yielding 8%, you can enter into a Pendle agreement and get tokens to essentially lock that rate in. Similar to how credit default swaps works, where it's a slightly different context, but essentially you're swapping a fixed for a floating yield or floating for a fixed yield. If you want to hedge the yield that you're getting, you can do that via Pendle. What people do is they deposit into Pendle, they borrow in Aave, they deposit back into Pendle, they borrow more Athena, and you have this loop of stable coins that is being generated. Anthony M., does that make sense? Are you participating in this crazy looping strategy here?
Well, it was before they were enabled looping, actually. So I tried to actually loop about a year ago, but I wasn't able to with Aave back then. And so I got a nice little airdrop from Athena, actually. But it was kind of a pain in the ass. So and so I have other things I need to do to keep the lights on here. And so I have unfortunately not participated recently, but
So what this tells me is that you could even be the co-founder of a crypto analytics company and you're not degen enough to participate in the stablecoin looping strategy that's going on here. But I think this drives the point home where you have retail customers using stablecoins for $10 payments, trying to earn 5% yield. You also have a surprisingly large amount of capital going to strategies using very sophisticated DeFi instruments in order to increase yield. And we can see that quite clearly here. And then you have another segment of stablecoin users, what I like to call more of the regular institutions that are also driving stablecoin supply. And so here we're looking at USDG by the entity that holds it. And so USDG is a stablecoin that is issued by Paxos Singapore and was created essentially to be a consortium and try to compete with the Tethers and the Circles of the world. Companies like, I believe, Robinhood, Galaxy Digital are all part of this consortium, Nuve, to try and drive adoption of this stablecoin. And you can clearly see the holders of this stablecoin are much different than the last two audiences. So BitGo Custody, Fireblocks Custody, Anchorage Digital. And what I believe is happening here is you have a lot of these companies that possibly are using stablecoins for a back-end settlement. So maybe Robinhood is settling weekend trades in stablecoins or doing some sort of settlement in stablecoins where they're holding the stablecoins at a custody provider. And so here you have a totally different segment, which, and USDG has, I believe that it has almost quadrupled in supply in the last few months. So you have these three distinct audiences that we're looking at here. So Anthony, we've seen Ethereum gain essentially 90% of all stablecoin supply in the last month. Do you think this trend will continue, or do you think that there'll be an ETH competitor that's lurking in the shadows?
Yeah, I personally think that chains are winner takes all. I mean, just seeing you present those slides in the last couple of minutes, I'm just a lot more bullish on Ethereum. Like we work with a lot of the L1 foundations across the board, and this diversity of use cases and sources of liquidity is like the holy grail. Like if crypto is going to be the infrastructure for the future of finance, like if you have degens looping yield on DeFi, you have institutions coming in, you have consumers, yeah, using stable coins. Like this is the hallelujah moment for Ethereum, and I think, and that's what Tom Lee also has been of Bitmine. He's been preaching, right, that hey, for financial institutions who want to get involved with smart contract platforms, really the only option that they trust is Ethereum. And so like Ethereum's having this like sort of Bitcoin moment. I think it's what everyone's sort of saying, especially on the FI side. And it's really cool to see it in numbers. And I think like to me, these chains are winner takes all in the sense that it's kind of like operating systems in Web 2 where, you know, Apple released their app store, all the devs are going to come in and build apps for mainly Apple, uh, and then you get more, you get better apps, you get more apps, and you get more consumers on the other side, and you have this like incredible moat that makes sort of Apple the number one, OS, phone OS, or or the smartphone platform, in the world.
Yeah.
And so, yeah, I mean, I'm just very bullish on Ethereum right now. It's given this data set.
Yeah, so I'll take the opposite view. I'll negate all the data that I just looked at. I've been starting to think of L1s as banks in that we have probably 10,000 banks in the United States, probably 100,000 more globally, in that all these banks offer different things, high yield, some offer investments, some offer, wires, ACH, et cetera. And so depending on the use case of the person, if they're looking to send a low cost transfer, maybe it's a regional, maybe it's yield, all these chains are going to attract different use cases. And that the way that people are going to send over it is going to be essentially abstracted by apps themselves. And so think MetaMask, Phantom. If I eventually, like, if I were to send you $10, hopefully I would never have to see like what chain it goes over. but maybe Phantom or MetaMask is saying like, okay, well, what chain is cheapest to send it over now? And so I'm trying to like optimize it for that. It's almost like an aggregator, if you will. Or companies like Layer Zero is just going to abstract this, where you have if I'm holding my money on Avalanche, but then you're on Linea, but then it's super cheap to send it across chains, they'll just route something to Layer Zero. And so I think there's definitely value in there obviously is having value of your own chain. Obviously, like Circle, Stripe. I'm losing count at this point of all these different chains that are trying to come up. And so I think, for better or for worse, I think we're going to see 100 more L1s in the future.
Mm.
We'll see. Sounds like a good user experience.
Well, I think that's like really the hardest problem to be solved for crypto is actually just UX. I mean, I think that's why it's like yeah, all these like really cool infrastructure projects are cool technologically. As a computer scientist, I appreciate like it's the technological innovation, but ultimately it's like the average person on the street has to be able to like use it easily. And we should create a poly market or betting, you know, bet on whether chains are winner takes all. I don't know how you would actually measure that, but
Number of
by
chain,
liquidity or something.
yeah, by liquidity, supply or something like that. Yeah.
Your point is basically that like the interoperability of these chains, unlike Apple versus Android, like which are not interoperable, like change the dynamic of the game.
Yeah, exactly. And now that if you're using it, especially if you're using an EVM, right, it's just so easy to pour over like everything from Avalanche to Linea to Arbitrum. And so maybe there's a protocol on Arbitrum that's offering, 6-8% yield. And all of a sudden people just go over there and then go back if it's, 7% or 9% on Avalanche or something like that. It's a developer's nightmare, but it is seemingly the world that we are slowly grinding towards.
Yeah, I think that's my as a former developer, that's my bias. I'm like I don't want to be like building on 10 different chains. Like
Yeah.
I'm just building on AWS, whatever has the most support docs, whatever Claude is the best optimized for, whatever documentation has the most documentation, whatever has the most like I don't know, like responses on a forum for like with this weird bug that I'm whatever Solidity bug I'm running into. It's like that's why it's like all the devs are going to gravitate towards one chain, especially as we move away from. I think the normies come in as devs, right? It's like then what are they going to choose? They're going to choose a thing that has the most support, and it's as like sort of simple as that. But yeah, we'll see. I do see your point.
Yeah. I wanted to quickly segue to raises. Venture capital raises are starting to heat up for stablecoins, which is always great. So here we're looking at Series B raises in the month of August, via our friends at Crypto-Fundraising, and you can see that half of the stablecoin of raises for Series B companies were stablecoin related. M0, which does stablecoin infrastructure and helps issue stablecoins across different chains. Rain, which does which does credit card processing, and Tazafay, that is enabling peer-to-peer payments. All raised Series B rounds, all distinctly different from each other in what they do. Which is exciting for just the number of use cases of stablecoins and just like the broad application of it. So yeah, do you think we'll have more than three next month, in September, or what's our poly market odds for stablecoin Series B raises in September?
I think it's gonna stay at around 3, based on my one other data point, which was I was at a incubator program as a mentor yesterday for a chain that I won't name because they haven't announced the participants yet. And uh, half the teams are doing something in RWA and stablecoin related.
Wow.
So these are all like pre-seed companies. So uh, maybe that's like a data point for a future Series A's and Series B's. But yeah.
Nice. Hope you brought your checkbook with you. Uh, and then I think finally the last thing we want to mention is we want to talk about USD1, which actually broke our chart on Artemis because the supply growth has been so quick, and especially on the Solana blockchain. So USD1 recently launched on Solana. This is the stablecoin from World Liberty Fi. In a little less than 10 days, we're already nearing $200 million in supply. This is after USD1 has roughly $2 billion on Binance Smart Chain, and then about another $400 million on Ethereum. It's pretty impressive given how many stablecoins that we see to get this quick of a launch.
I mean, first off, I think like hats off to Trump for branding it as USD1. It's really like actually a very clever name. I'm surprised that other people haven't taken that that name actually. But definitely rolls off the tongue. But I think more importantly, like everything else in the world, like everything just vying for our attention. And at the end of the day, like stablecoins themselves are, or even currency is a brand, right? That's what is. That's why the greenbacks, the U.S. dollar is so popular. People have all these beliefs and they have the confidence in the U.S. dollar and the country's ability to pay off its debt. We can have a whole separate conversation about whether that's changing over time and which way it's trending. But for at least a good part of the last several decades, the U.S. dollar is and T-bills are the risk-free rate, right? And so having this brand that's tied to the president of the United States is very powerful, and I think no matter which side of the aisle you're on, it's it is really important.
Yeah, I like that the angle of brand, especially because under Genius, you would essentially all stablecoins become the same. They're holding short-term treasuries. The differentiating aspect is clearly liquidity, but yeah, how do you differentiate, a PYUSD versus USD1? It's really about like the story that the stablecoin tells, like the ideals and the vision that it has, and having like the U.S. government associated with this grand vision of stablecoins is no offense to other stablecoin, the fintechs, people can. It seems like people can get into the story of like the U.S. dominance and the U.S. Heritage versus a fintech company. So I think we'll definitely see a lot more creative ways that companies try to increase their brand in the stablecoin space and really have people identify almost with the stablecoin and to pick your favorite stablecoin, if you will.
Well, thanks, Andrew. I think that's all the time we've got for today, and thank you so much for the audience for listening and watching. Andrew, where can people find out more about you?
Well, you can follow us at Artemis on Twitter and hit up our website, artemisanalytics.xyz.
And if you haven't already, please subscribe to Tokenized on Apple, Spotify, or whatever podcast platform is your favorite. Finally, if you enjoy this and want more, leave us a review. It really helps others find the show. Thank you.
Stay stable, everyone.